Hey guys, so it's Saturday afternoon. I've got a little bit of free time. I thought I'd make a video helping people to understand the stock market and how to trade successfully. When you watch a YouTube video on trading, often what you're going to get is a sales pitch. They're going to try to, did I say spitch? Pitch. They're going to try to sell you something, maybe their service, more videos on learning how to trade and whatnot. But when you're watching a video that I put out, I don't want anything from you. I'm happy trading my money. So many people have come to me and asked me to trade for them, trade their money, and I just always say no. I'm very happy doing my own thing. But that doesn't mean that I can't share what I've learned with you. So I listed a bunch of questions on the blog post that's going to be connected to this video, and I'm going to go through them with you. And let's talk about them. Let me answer those questions for you. And just kind of simplify the market so that you can understand something that's supposed to be really complicated can be very simple. So the first question is, what is the stock market? So what is the stock market? It's an auction. Basically, that's what the stock market is. It's an online auction. It used to not be an online auction. You used to have to call your broker, and then the broker would call somebody on the trading floor, and they would actually trade, little tickets amongst each other. But now it's an auction, and it's a lot bigger than just stocks. Now we have cryptocurrencies, and we have regular currencies, and we have commodities, and we have options, and we have all kinds of things. But basically, it's trading one thing with somebody else and agreeing on a price between the two of you. So that's what an auction is. If you go on eBay and you want to buy a soccer ball, then you might bid $10, and somebody else bids $11, and another person bids $11.50, and so on and so forth, until finally the seller says, or the time that elapses on eBay, but the seller agrees with the price and says, okay, I'll take $11.50, and then they make that trade. Well, in this case, with the stock market, you're saying I'm willing to pay $400 for Apple stock, and there might be a whole bunch of sellers above you that are willing to take $410, but you're willing to bid $400. And somebody else comes in and says, oh, I'll bid $411. And then this seller over here says, okay, I'll give it away for $411, and a price is agreed upon, and then that's a transaction. So that's all it is. It's just an auction. Number 2, who are the players? So there's retail investors, and that's me, and that's you. And then there's bigger guys, there's different companies and whatnot. There's market makers, and a market maker has to follow rules. I don't want to go too elaborate on all this because it's going to make this video super, super long. But anyway, the market maker has to have a buy and a sell on the market in order to stay a market maker. And so these guys have lots of money, and they make a market because they're always willing to buy it at some price, and they're always willing to sell it at some price, and they have to list both of those things on the market. And that allows for something like right here, see the market right here? That allows for you to have a whole bunch of sellers and a whole bunch of buyers, even if they're not just common people. Like let's say you come to the market right now and you want to buy something. Well, you're gonna jump on the bid here, or you're gonna buy the ask. So either you're gonna pay what these guys are willing to sell it to you for, or you're gonna offer a lower price and hope that you get filled. But you're only doing one thing. You're just coming in and you're either buying it, or later on you might be selling it. But you're not buying and selling because you don't own any to sell. So, but a market maker keeps an inventory, and so he sits with some stuff to sell, and he also has some money sitting there wanting to buy. So he's making a market. It's a good name for a market maker. Okay, so the third question is there a holy grail system? Is there some magical system where you can just sit back and make a ton of money? No. No, there's not. If there was some magical system, everybody would be rich. People just want to be able to buy something and come back in a day or two, and it's worth so much more money, and never have to think about, stopping themselves out or getting out of a bad situation or taking a loss or anything like that. They want some indicator that will say buy now and sell now and so forth. And yeah, that doesn't exist. What it really comes down to is probabilities. You have to understand probabilities. And that's why I talk a lot in my videos about percentages, to think in percentages. Well, you also got to think in probabilities. Percentages is how much can I earn on this trade? You know, like am I buying this thing for 10 and selling it for 13? So I'm making 30%? That's percentages. Probabilities is if I look at the chart and I read the story, how many times does this trade that I'm about to take, if I see other identical trades in the past, how many times has this worked? And if it's worked 4, 5, 6, 7 times, wow. So now I've got a 70% chance that this trade is going to be a winner. If it's worked 7, 8, 9, 10 times, I've got like 99% chance this trade is going to work. So you read the chart and find out what the story is, and then you know what your probabilities on the trade is. There are some stocks, or I don't know, I'd have to look through these cryptocurrencies, but there's some tickers where there's just no volume, like nobody's participating in the market, and so you can't read the chart. It's all over the place, you know. Maybe it drops and drops and drops and drops, and it never bounces, and then it goes sideways. Those type of charts are super rare, but they exist. And then there's charts that are just unbelievable. They're like a gift. You catch them and you're like for instance, Ethereum. I'll go through a chart of Ethereum with you. How can you lose money on Ethereum? As an investor, absolutely you can lose money. As a trader, if you understand probabilities and if you understand thinking in percentages, I really can't see how you could lose any money on Ethereum, and I'm going to show that to you. We're going to break down an Ethereum chart so you can really see that. But anyway, there's no holy grail system. Even I, once in a while, have a red day. I mean, believe me, it happened to me on Friday. Just this Friday, I had a red day. And I'll tell you what happened. I don't want to take up too much of the time on this video, but so I'm in this trade. I'm getting in this trade. You know, it came down and it gave me a nice little panic drop, and I was like, oh, this is beautiful. It fell from 50 cents, and I was like, ooh. So I got in around 25 cents. I was like, wow, like that's a 50% drop. That is beautiful. And then it dropped again, like really bad, really hard, really fast, and I scrambled to try to get out of the trade because I read the chart. I read the volume, and I was like, there's too many people selling here. Something big is happening. No news, no way to figure out what's going on, and the thing just dropped and dropped and dropped. And by the time it ended, stopped dropping, it was at 6 cents. So from 50 cents to 6 cents. And you would think at 6 cents this thing would have a bounce. At least 10 cents, 12 cents, give us some kind of a bounce. No bounce. Just relentless selling, 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 selling. So I'm out at this point, but I'm like, I lost, you know, $1,000, $920. So I was like, holy smokes, you know, this is a red day. I don't know if I'll be able to recover that in the, you know, I had, I don't know, 2 hours left to the market. Not likely am I going to make my money. So I was like, wow, I just had a red day. It was slow all day. I didn't find any trades, and then all of a sudden when I do find one, it kills me. So I went and looked up the news, and there was no news, but I went to try to find out, are there rumors? What's going on here? And what happened was a judge, he made the decision that the shares would be worthless in a bankruptcy. So this stock was going through a bankruptcy, and a judge decided that he made a ruling that the shares were going to be worthless. That whatever assets that the company had would be paid out to the people that it owed, to the debtors, and those shareholders would get nothing. So when you get news like that the shares are worthless, then it causes this crazy panic that doesn't bounce because there's nothing of value left to the shares. And I had no way of knowing that. So you can't read that on the chart. That happened, and I bought in unaware. And it happened like, you know, minutes before I bought. There was no news anywhere. So, you know, when that happens and I have a red day, I'm like thinking to myself, well, you know, it's rough, it sucks, but I didn't do anything wrong. I got in, there was a panic, I saw the panic, I got in where I thought, you know, it would support and turn for me. And it turns out that there was news that I wasn't aware of and that nobody is aware of except for those big guys who are selling to the market because they just realized their shares are worthless. So, even I have a red day is basically what I was trying to say. So, I didn't count my red days last year. I forgot to do that, but I think the year before that I had 3 red days in the entire year. And you know, like that was huge. 3 red days all year long. So that's why that stuck in my mind. Last year, I don't know, I might have had a dozen red days, I'm not sure. But basically every day is green, 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 and then once in a blue moon you have a red one. And it's not a big deal to have a red day, because you're in a, like, there's nothing better than trading. You're in an environment that just pays you all the time. So once in a while when it slaps you, it slaps you. So now we're going to look at some charts. So I want to outline 3 steps that you can take that will almost guarantee you success in all of your trades. Now, that's a bold statement. Really? Simply just 3 steps? 3 steps, and if you follow these 3 steps, you will be making money from here on in. So step 1. You got to look for an argument. Now, what are you talking about? I got to look for an argument? That's it. What you want is you want a large group of people disagreeing on a price. And they all have opinions, and, you know, tons of them want to buy and tons of them want to sell, and that makes a really good market, and it makes a really easy chart to read. So when you look at the charts, and you're going to read through the story of the chart, what you're looking for is tons of supporters and tons of sellers, tons of people that are against this thing and tons of people that are for this thing. And that's going to make the chart bounce around, but it's also going to be predictable, because if it bounces too far this way, then people are going to sell it back down. And if it bounces too far that way, then people are going to buy it back up. So it makes it so that you can't lose money. But you've got to find those charts. So your first step is to look for a good argument. Then your second step is going to be read the story of the chart. So you're looking to see what are your probabilities of success. So, you know, it takes me, I don't know, 30 seconds to read the story of the chart. So you'll get good at this after a while, and you'll be like, oh my goodness, this chart is unbelievable. And you can, if you read the story of the chart, you can literally trade that chart for months and make money every day or every second day or every third day for months. And you'll be able to fill up this little side section with all the charts. If you go to Polynex here, look at all my charts. You can fill up this thing with all the coins that you've read the charts and you're like, oh man, this is a good one to trade. So you can just woof. Now, not all of these are those type of charts. I didn't list this because of that. I listed this because these are the ones that have a lot of volume. And so the first thing you're looking for, step 1, was finding an argument. You're looking for stocks where there's a lot of movement and a lot of people involved. Second step is read the chart, read the story. And so you're looking to find whatever gives you high probabilities of your trade becoming successful. I'm going to go through all this with you individually, but let's just go through the steps first. And then your third is to set yourself alerts. So you find stocks that have a lot of argument, that have a lot of volume, and then you read the thing and make sure that, oh man, this is a good one to trade. It always works out. Every time I would have taken a trade, it would have worked out. So the probabilities are super high. And then the third thing is set alerts. Go ahead, with Coinigy, it's super easy to set alerts. You just go right here to the alert tab and you type in where you want an alert to be set. You can see all my alerts set up here. So you just plug in your alerts in the spots that you would be buying. And then it will tell you when to buy. It'll be like ding, ding, ding. And you go and check and oh yeah, and boom, you're in. Those are your 3 steps. Where do you sell? That is easy peasy, and I'll show you that too. So let's first start. I can't think of a better chart to look at than Ethereum. Ethereum is probably one of the best charts to be buying. And I'll tell you why Ethereum is so awesome. It's because it's strong. There's lots and lots of people involved. Everybody's interested in Ethereum. You know, they got all kinds of dApps or whatever, all kinds of programmers that are working on things to use the Ethereum, to work off of Ethereum. So there's so many people involved in so many projects that it's a big, big deal. And then you get the DAO that got hacked or whatever and lost a bunch of money. You get these really bad things that happen that it's not directly Ethereum's problem, but it's all these little apps on Ethereum that are running off Ethereum that all of a sudden have all kinds of issues, and then lots of people hate Ethereum, hate the DAO, and there's haters, and then there's a ton of supporters. So you got a good base for an argument, and you're going to see it on the chart. It's going to be an awesome chart because of that. It's going to be a chart that you can't lose money on. Okay, so let's take a look at the Ethereum chart. We're on a 1 hour chart. Let's just make that a 4 hour for now, just so it's really easy to read. If it's something really hot like Ethereum, then it'll work on a 1 hour chart too, and it'll work on a 15-minute chart, and it'll work on a lot of stuff because the argument is so thick that it's just going to be easier for demonstration just to show you guys how simple it is to read a chart. So I'm just going to go to 4 hours for now. So you take a look at this chart and you think to yourself, where are the arguments, right? So when I say an argument, I'm saying that there's going to be some clear support and there's going to be some clear resistance on the chart. And so if you look at this chart, it's really easy to find support, like support right there and support right there and support right there, right? Now there's going to be little arguments on top of the big arguments. This right there, that's a little argument, and this little section right here is a little argument, and that's a little argument. So there's lots of little arguments, but there's also the big ones. So the big ones are always the safest, but you can play the little ones too. You can play the little ones. You just have to be quick. You have to be like, if you're gonna work within a 1 hour chart, or if you're gonna work within a 15-minute chart, then you have to expect that you have to make your moves within an hour or two. If you're gonna work on a 4 hour chart, then your moves are going to happen over a few days. So it's just whatever you decide, whatever chart frame you're using to read from, that's the length of time that you're going to be using. So, look at this chart. Okay, so here's your argument. You got an argument there, down to here. So let's say from 2.3 to 2.9. So the 5-point argument. And then when this happens, when you get a panic drop like that, what you have is you have a surprise, right? So right here, everybody's supporting this price and supporting this price and supporting this price, and then all of a sudden, surprise, and it cracks, and lots panic. Not all of them, probably 50% of them panic and start selling and selling and selling and selling. You get this dive, but the price comes back up to retest this support because eventually, these guys are going to run out of stuff to sell, and then the buyers are going to step in, and the buyers won't have any sellers left, because all of these were sellers. I've got to pause the video because I just got a text. Sorry about that. The texts just don't stop coming today. So what happens is stuffing. So again, I don't know if our chart is in the exact same place because I touched it with my mouse, but around 2.5, 2.4 is your base here. And then it fell really hard, and then look at this little volume spike here. See how much volume all of a sudden there is right here? It's going to be easier to read this on a smaller chart, like on the 1 hour chart. You'll see all of a sudden a whole bunch of volume right near the bottom, and that's stuffing. That's like some serious money comes in to support the price right there, and then based off of that, it can't go any further down. You know, they buy up all the rest of the sellers, and then the thing turns, and people start to realize it's being supported, and everybody starts buying it, and then you bounce back up. But now, when you're bouncing back up, you don't have sellers anymore. So there's nothing to stop it from going all the way back to where it was previously supported. So you get this nice bounce. So this is where you want to buy. You want to buy where the big money just bought. Because to stop this from having a panic fall, it has to hit support. It has to hit big money. Somebody who's got, or a bunch of people who have a lot of Bitcoin to spend to buy up Ethereum. So right there is where the money steps in. That's where you want to step in, and then you get this nice bounce up back up to previous support, which is now resistance. And then eventually, especially when it hits this right away, it wants to turn itself around, and it cracks again. And then another, well, you can't see it as clear, but a big chunk of volume comes in right there and supports the price again. And it bounces again. And again you get, like, we're talking about from 16 to 21 or 22. Like really big percentages. Just beautiful. So the next argument would be this part, right? This is an argument, this is an argument, this is an argument. And here's your resistance, where everybody thinks it shouldn't get past this price, it shouldn't get past this price, and then boom, it surprises everybody. And it goes past that price. But how long does it last? Not very long before it comes all the way back down. And this is another swing of 23 to 34. You know, huge swings. Comes right back down. So if you were shorting, you can't short, but well, maybe you can if you have a margin account, but if you were shorting, you would make money on this. And then here's your argument again. They're giving you some clear support, clear support, clear support. They crack that support. Now, of course, that was that Dow situation, but they crack that support, and they go all the way from 22 all the way down to 7. 22 to 7. You can't even see it on the chart. And look at the volume step in. So, I mean, you can't get a clearer chart than that. And then from 7 all the way back up to 23 on that bounce. So this is where people are panicking. And when people are panicking, that's your optimum place to be buying. That's your highest probability trade, especially if you can watch and catch it right when support steps in. When you start to see really, really big orders going through, then you know that somebody is stuffing and supporting that price at that point and just taking up all of the buyers that are panicking, all of them all at once. And that happened around the 7 section. Then you had that nice big bounce. And then now, back into very small arguments, actually. The rest of this is all very small arguments. But every time you get an argument, you know, like right here's an argument, an argument, an argument, and a crack of the argument, and a bounce right back up. And it just, that stinking texts. Sorry, my phone keeps on texting. It's because I'm selling those 2 saws. I don't know if you read my blog, but a week or 2 ago, there was a misprice on the Sears website, and a miter saw that was $500 was on sale for $14, and then a table saw that was $400 was on sale for $14. So I bought those and I listed them, and now I've got somebody trying to negotiate the prices with me. But yeah, I'm definitely going to be making, I don't know, somewhere around 30 times my money on that. Anyway, it's crazy. So, getting back to charting. Yeah, so you can see, you look at this chart, you can see obviously that if you were just buying all the panic dips, and all the panic dips, and all the panic dips, and all the panic dips of all the arguments, that you would never lose any money. And so, isn't that the best way to trade? Why would you breakout trade? Like, let's say you bought here. Let's say you bought on this breakout, and you're like, yeah, I win. You know, it goes all the way up to here, and maybe you get out and you get some profit. That's awesome. But what about this breakout? See that little breakout right there? Did you win? What about this breakout right here? You know, it's a little bit higher than that one. It's a breakout. Did you win? What about I don't know, is there another, right here, what about this breakout? Did you win? So, like, what about this breakout right here? Look, it broke out from there. Did you win? You know, like, what are your odds? You got to read the story of the chart and then figure out if the strategy that you're thinking about doing, is it a strategy with high probability? What is the odds of you winning? Well, you look at this chart and every single panic dive below support was a win. Every single one. All the way through the whole chart. And if you dial this chart down to a 1 hour chart or a 15-minute chart, so you dial it right down and you start playing just the little itty bitty dips. Just the, you know, you look for an argument. Okay, here's an argument right there. Oh, it broke the argument. Oh, you got a rebound. Okay, here's the argument right there. There's the argument. Oh, there's the little panic. Oh, you got a rebound. You know, every little argument gives you the rebound. So why does that happen? Why is it that every single panic rebounds back to previous support? Like, how does that happen and why does that happen? Because you found a chart that has a really good audience arguing. Everybody's arguing. So if people get surprised, if you know, here's the argument, and people get surprised, and it manages to drop all the way down from 18.5 all the way down to 15, it goes all the way back up because it's not going to convince everybody that Ethereum is garbage. There's going to be a few people that panic, but then the people who are supporting this will run the price back to where they think it belongs. They really truly think it belongs at 18. So that's why that's step number one. You're looking for the argument. You're looking for a chart that you know there's a lot of people that's going to support it and there's going to be a lot of people that's going to be against it. And that's going to make for something that you can read and always make money off of. That's Ethereum. Ethereum is free money all you want all day long. Because every single dip, every panic works. So basically a good trader doesn't take opinions on the market. All he does is participate. That's it. He looks at, he reads the charts, he understands what's happening, and he takes the opposite trade when people are panicking on a stock that is well supported. It's the easiest way to trade, and so low risk. It's unbelievable. Okay, so you kind of got step one and step two in your heads. First, you're looking for an argument. You're looking for a well-supported, high-volume stock, or in this case, cryptocurrency. And then you're looking to read the chart and make sure that you have a very high probability of your trades always working out. So you got those two things, and then the third thing is you got to set alerts. Because how are you going to know when those panic drops happen? And this is a question that I've been getting even in message boards. Oh my goodness. Sorry, I had to pause the video for a second there. Isn't that crazy? I'm talking about alerts, and then a whole bunch of alerts go off at the exact same time. Okay, so that I'll show you in a second what that was. It was library coin. But anyway, Ethereum. So see, I have an alert right there. So let's say I want another alert. Let's say I want to try for 19. I think it's going to come all the way down to here, or at least if it does panic and dive all the way down to 19, then I want to be interested. All you got to do with Coinigy is just press the alert button and take it to where you want it. I think I'd like it right there, and that's it. I mean, there's nothing to do. It's just boop, alert me when the price falls below 19.5. I mean, it's that easy to set alerts. So super simple. Okay, let me show you. Let's just go to library coin because it just happens to be popping right now. So see, it just jumped up from 22 up to 27.9, so up to 28. So big spike. I don't know if it's going to start turning around. You know, if you've been watching my videos, that I'm in this for free. I've made, just the other day I bought here. Actually, I guess I can pop that up on the chart. History. I think you just press history. Yeah. So you can see I bought there and sold there and there. I sold right at the previous support. See that support right there? So yeah, it panicked all the way down to here. I didn't get the exact bottom, but I got a nice little bounce, and that was, you know, that was around 20 to 26, 27, 28. What am I saying? 28, 29. So from 20 to 29. So really nice, beautiful trade. I'm in library for free. I got a whole bunch of free coins. So who knows? Maybe this thing's going to turn around soon and head up. Hard to say. It's got a long way to go up, but anyway, even a chart as ugly as this, where it's falling and falling and falling, I'm making free coins all the way. So once you get good with reading charts and you really understand this concept of how people think and how a well-supported chart with a really good argument basis, how you can use that to your advantage, you'd just be an exceptional trader. Okay, we're at 30 minutes. I've paused this video so many times because those texts just won't stop. But I don't want to go too much longer than 30 minutes. This is the longest video I've ever made. Traders often ask me, how can I feel confident about taking my next trade? And that's really kind of the theme of this video that we just did together. I wanted you guys to see that you can read the story in a chart, you know, and looking here at Ethereum chart, you can read the story and be like, okay, every single dip, every panic dip, always paid, always paid, always paid, you know, every single one always paid. And so you're like, okay, how many times is that? You start counting them. 8, 9, 9 out of 10, 10 times out of 10. They've always paid. So then you take your next trade and you feel confident. You're like, the chances of this not working out are so incredibly slim. You know, whereas if you get onto a chart where, okay, it works, it works, it works. Oh, here's one where it didn't work. But it worked, it worked. Okay, so it worked 8 out of 10 times. That sounds like it's pretty good, you know? So you can kind of vary the amount, the size that you're going in based on that. Then the other thing is, once you get good at this, then you're going to start to put things together like, okay, now not only do I have a panic dip, but I have stuffing happening. It looks like there's a lot of volume coming in, and they're supporting the price at this level, and it doesn't seem like it wants to go any lower. So I got a good panic. I've got a high percentage panic. Let's say this, the stock fell 30-40%. I got a high percentage panic. Now I have stuffing. I'm going to get in with the guys that are stuffing. And then you can buy in at the bottom. Imagine being able to buy in right at the bottom. And if I had time, if I was going to make this video any longer, we could scroll in to one of these panics. You know, right in, to where you actually get to the volume spike. And look, let's just scroll right down. See that big spike right there? See how it went down all the way down to like, whatever that was, 13? It went down to 13, and look at the volume come in on this bar. So the volume is that blue that's underneath. So, you know, here's a little bit of a volume and a little bit of a volume, and that created a bounce. But look at the volume right here. So this is where the money is supporting it. And then, of course, you're going to get a bounce all the way back up to whatever, 15, 16, 17, 18, 19, you know? That's where the money stepped in. So eventually you'll get used to seeing this, and you'll put things together. Not only did you get, you know, a good panic drop, not only is it a high percentage panic drop, now there's stuffing on top of it, and you're on a chart that the probabilities are so high because every other dip has always worked. And then, I mean, your confidence is right up to here on taking a trade, and you can get in heavy. You can be like, okay, I'm going to put in, you know, 10% of my whole equity right in this. Okay, so we're going to call it quits there. We're at 34 minutes, and I hope that this video helped you. I hope my other videos help you, this video series. I'm not very video savvy, so there's not a lot of special effects. I had to pause this video so many times to answer the text, so I apologize for that. Please leave your comment, you know, on the YouTube video or on my Steam It blog, just leave me a comment and let me know that you're watching and that you appreciate what I'm doing, because it's the only reward I get for doing these videos. I make all of my money on the stock market, and trust me, I'm rewarded huge for trading on the stock market. I love it. Every day I get up, everything I have around me is all given to me by the stock market. I mean, I couldn't ask for a better job, and I look forward every morning to getting up and being like, what am I going to trade today? And then, you know, every once in a while you get in these big trades and you're like, woo, that was awesome. You know, I can't believe I made that much money. So trading is awesome and super fun, and I'm trying to convey that to you. I'm also trying to convey that it's not complicated. If you can simplify it the way I simplify it, then it's just going to be so easy and stress-free, and it's just make. And yes, once in a blue moon, like on Friday, you get hit by something that you just could not expect. You know, you got in perfectly, everything was fine, but then, you know, news that you're not aware of happens, and that happens. That's the stock market. That's why you never go in, all in. That's why you never put your whole portfolio into a sure bet like Ethereum. You never stick all your stuff in. But what you do is you put, you know, 5%, 10%, and you make that good reward, and you just keep on doing it over and over and over again. So anyway, I'm going to leave it like that. I'm trying not to ramble on. Please leave your comments below. Please leave your questions below, and I'll see you in the next video.